The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Good to be back. Apologize for being out the past 2 days. Had some business to attend to. Unforeseen. Picking up somebody at the airport with suitcases full of different things. Here we go. Let's take a look at the S&Ps. You know, kind of boringly hanging around up here. Talked about not been a lot of indications to really get, step on the gas pedal on the short side or really even on the long side because you really hadn't had a chance to play defense. Here's the 240s. We've looked at this just to get right into it, cover a couple of usual suspects. Thanks, RJP. And, S&Ps are one of those usual suspects, 2153, 2154. That's been really the only thing to hang on to. And I really have never seen a 240 this long. This is pretty much incredible. And the longer something spins around up here in a situation like this, the more and more it has a chance to really follow through and move higher. This is a picture of where buyers and sellers think the market needs to be. And as we move past that 2101, 2105 area, those all important numbers from the inflection points of the profiles themselves, we've really reached a plateau and really just wanted to, again, spin around up here. And those are continuation patterns. Throw profiles out the window. Those are just technical analysis continuation patterns in general. So that's the situation in the S&Ps. You've had just a horde of earnings announcements come out this week. And we're going to go through a couple of those after we get through the usual suspect list. I'm going to take a look at crude oil. This is kind of weird how this is just kind of falling off. I told you I wasn't really super excited about being long or short crude oil right now. The XLE, obviously, we're going to look at that in just a second and take a look at, how that might be some kind of forebearer of news. Sometimes is a leading indicator on crude. But 45.66 still the big number. We kind of closed below a week before, closed above last week, but these are not earth-shattering moves here in crude, and I think you really don't have a lot of leverage here. I'm not super excited with the market going straight up of getting short crude in any big way. If the market goes higher, usually this is kind of bizarro world, as you guys know, the past couple of years with the market going higher, notes going higher. Is the economy actually doing well? It's doing well relative to the cooked books type numbers that come out, the unemployment numbers, not the employment numbers. But again, that's a whole day's wacky discussion. They trade off of those numbers and, the market doing well, again, if it was a normal, condition and our currency was just kind of, semi-okay, that usually means the economy is doing well, and crude is usually not going to just kind of slough off in those type of situations. So interesting that, crude is just kind of lagging down here. Here's the XLE. Talked about this just kind of hanging around up here, that, big support at around 68.23 combined with 68.16. Those are the big time weekly numbers. This is why it's been really difficult to short crude for me. Looking at the XLE, I think you got to just look at this as, who's right? Is crude right or is the XLE right? And when those types of situations arise, sometimes it's good to sit on the sidelines and wait for the first guy to blink, if that makes any sense. All right, so going back into a couple of usual suspects that we usually hit. Here's gold. This one got right down to that number, 13.15. I didn't have a chance to trade this off of this, but this was kind of that weight and back the truck up area. It reached a low of 1311. Again, the noise factor 10% within the variance. I don't think within the scanner. I wasn't looking at it in the scanner when this happened. Let me pull this up. Why is that like that? Here we go. When we go into the future section and we look at gold, we've obviously got back up off of that 1315 area. Let me just show you this. And there's the daily. There's the 1315. And by the way, we are currently working on an HTML5 version of the scanner. We've been working on it for a while. We've actually tried to strip out a lot of things and make it 1, 2, 3 step type process. We're only focusing on dailies in there. If you want to get more time frames and be able to custom sort things, you'll have to get the big mama version as you're seeing now. But the daily inflection points are very, very powerful. That's why we chose that time frame to kind of make it simple for everybody. You guys that watch this show, a lot of you have a deep understanding of the markets, and you look at a lot of different technical analysis shows on TFNN. I commend you for that, to get a really good step back perspective and slow your trading down really, and kind of take a lot of things into consideration before you make a move. But a lot of folks out there, we've realized, really want to focus on, what's the opportunity, and basically a dissertation, i.e. like this TAS says button, telling them exactly what to do. So we're making a little bit more of a slimmed down version of this. But to get back to my point, 1315 is that big area to play defense against. These daily profiles are very powerful. I like to use them in concert with other time frames. But again, if you had to, I'm not going to say that famous term I use anymore because of the crazy stuff going on with guns these days. But if you forced me to make a decision, how about that one? The dailies are probably one of my favorites. The 240s, again, regulating the profiles up on the dailies. I kind of like to look at those together. The weeklies are very powerful too. But again, playing defense below 1315. On the trade where we got into that noise area down there, we actually rallied back off of that area back into 1335 or something. So nice 20-point run in gold, but now we're settling back. And I still think you've got a chance to play defense below 1315 and just kind of let this thing do what it's going to do on the upside. The 10-year. God, what would it take to really make this thing sell off? I have no idea. Here's our daily. Here's the numbers you can focus on. Kind of pierce those, got back above, closed above. Didn't have a close below this profile yesterday. I wasn't trading this yesterday, but I like this right now. I like the 131, 31, 132 general area to buy this and trade it back up into 132.28. Beans, man, this one just broke my heart. 10-15 didn't hold. I thought I'm not a big fan of double bottoms or triple bottoms, but I thought we'd at least hold there and get a good bounce, a little bit better bounce than we had yesterday. We're going to talk about beans in a little bit when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Go. Let's take a look at the U.S. dollar. And we've been talking about this from the long side. Still, again, one of my favorite trades to go back and meet the unfair lows on a balanced area around 98. That's still the case. How do you play defense on this now? Again, we've had nothing to hang on to on the dailies. Just been that kind of weekly long-term trade that really is, it's not going to make your broker happy. You're not going to be trading that a lot on a long-term trade. But here's the 240s. Here's the only place where you can really play defense on these, kind of ratcheting up and kind of creating that trailing stop type mechanism that expands and contracts. That's why I like these things a lot. And again, you guys are probably looking at stochastics and a lot of the things that, Basil, Steve Rhodes, David White, Tom, Larry, Daryl Martin, a lot of, and I hope I didn't leave anybody out. Andy Hecht. I don't think Nico and Paige are doing technical analysis yet. But if I left anybody out, I apologize. It's morning, and we're drinking a lot of this just to try to clear the air, clear the brain cells. But, a lot of the hosts on TFNN put forth some incredible information. And, I probably, could put more, different slants into things other than the profiles that I look at in Navigator. I just look at two things. But that, simplistic mechanism, of putting those two things together works for me. And I listen to the other guys that I just spoke of a lot. I keep it on the background, and I like to pick up different ideas from them and different, MOs that they might have. And I like to listen to why do they have that slant on that particular instrument at this time. And, if it's something that wow, that makes sense. Let me get a biased opinion around my own information. That helps me a lot. I mean, really, it slows my trading down. I mean, you can look at, I mean, please go to Google and look at statistical analysis of, again, getting past the microsecond scalping dark pool, around the corner from the exchange, trying to get ahead of trades, that kind of thing. That's another universe. But people who sit around and trade a lot, actually, the odds are you're much better off trying to back up a little bit and create a little bit more higher probability situation for your trading, increase the odds, slow it down a little bit. And if you've never looked around on the internet and looked at those statistics, you actually should. Okay, so again, we've looked at a couple of usual suspects this morning. I want to hit silver really quick. So as we look at silver, yesterday we almost pulled back into that 1904 kind of back the truck up area. We were able to use the 240 unfair lows. I'm not a big fan of going short silver or gold. It's just, okay, if we can find support and we can try to pick a battle and we can get stopped out if we're wrong, that's totally okay. And we can, have a new area to lean on, like yesterday when we had this, yellow bar up here. And again, it's real. We tried to make it really easy in the scanner. Let me close this down. So when you pull up the silvers of the world, when you see these, new hints of new profiles attempting to appear, you're going to get a new set of inflection points to focus on. And that was the case there. And then you've got a place that you could possibly lever against and play defense. So again, I'm looking at the longer term view. And again, we've got a new profile, big time new inflection points that are probably going to appear. That today's Friday, Monday morning, if this stays in force yellow, just like you saw in the scanner right here, where are we at? In silver. You will have some new, very long-term cool inflection points to lean against for the long-term trade. But right now, I'm not a big fan of going short silver or gold. There's some fundamental reasons for that, but there's also these technical reasons that we're showing you in silver and gold. This is the major play defense against on the daily 1904, but you've got, decent little opportunities on the 240s to look at too. Again, if you watch this show, I'm a big fan of those daily profiles. So, what do you do with silver now? I think you just, we bounced, we come up here, we kind of spun around. I think if the market could, move south at all, if there's any disturbances, I just think you've got a silver and gold that's just kind of edging sideways. And when you step back and look at it in that sense, I think we're due another leg up in both of these products, and I don't want to miss it. Okay, so let's take a look at copper really quick. I think Andy Heck he and I were speaking about this a couple of weeks ago, and God, I love watching his show. Just incredible commodities outlook. I said, the only way I could even see getting along this thing is getting back above 2167, and then maybe the 2.3295 is the targets up top. It's really just kind of been in a long-term mishmash here. As we look at this, what do you do with copper? The only thing I see that's decent about copper, is let me pull up our daily here. God. Sorry about that, guys. I keep telling people not to pipe into me. Looking at September copper, the only thing I see decent is that we are kind of edging up using daily profile numbers to kind of keep powering up. I think your targets here are 2.32 like we talked about on the weekly, and I think you got to put hard stops below, and let me pull this up on copper. Yeah, 2.17 into 2.21. That general area is right below there is where you're going to probably call it quits. It's been something that hasn't been very exciting. it's been really wild how this thing hasn't been going north more so. You know, if the globe was having, well, let's take a look at December corn. We're just going to leave copper at that. You know, I had a friend down, a business relationship the past 2 days, and, you know, we were riding around, again, just kind of looking around at real estate, things like that, just kind of riding around the eastern part of the state while we were talking. Fields of grain look incredible around here, and I don't know what's going to disturb and cause, you know, corn to even bounce at all. It's just incredible looking, and all the reports out the Midwest look good. So, guys, we're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And we were finishing up with December corn. I was kind of pressed for time there. Really, the bottom line is, here's the daily. You know, we've broken down below 352. I didn't like how this thing was kind of going back into the inflection point and crowding it. We closed below, we retested, and literally things don't have to be too low in the commodities world. I mean, this could get really nonsensical on the downside. I always remember, you know, that, you know, a I mean, until you see a throw up move and everybody kind of hitting the exit door at the same time, a lot of times these commodity kind of just trail downs are not over. So keep that in mind. There's really not a lot of good fundamental reasons out there for corn to really rally. Yes, RJP, I will look at the 30-year in a second. Thanks for asking about that. But you know, December corn, I just, you know, I don't see any reason to even take any shots down here unless you're going to do something like, I'm going to buy corn and then buy some in the money calls and just kind of wait the thing out, you know. But and you've got some time between now and December. Trust me. That's what is that? 5 or 6 months. So again, that might be the play, and then you just don't get to trade it for a while, which is not a bad thing, as we talked about. Let's take a look at the 30-year. Where are we at here? 30-year. September 30-year. Well, we don't have a lot to act on here on the 30-year. I don't know, RJP. The chart seems to have an extra red line. There's the weekly. Here is the daily. And I'm going to go into the scanner and just check this out just to verify something really quick. Scanner chart. Okay, we're looking at the landscape view. Here's the what time frame are you speaking of? We're addressing something in the den right now. Somebody's got a question about the 30-year. Ouch. Okay, yeah, I get it. You know what? Thanks for bringing that up. I will address that. I apologize for that. There's something wrong on our weekly there. Yeah. Okay, well, let me just write that down while we're talking. RJP, I'm not making excuses. We've got 5,000 instruments in this thing, and sometimes we have a blip in the data, and thanks for catching that. And if anybody who's got the scanner ever has an issue, I don't think we have a lot of these issues, but just email me directly, and I will pass it on to our tech guys. Okay, thank you. All right, so I want to take a look at some stocks. And yes, we will look at something else being requested in the den, the Aussie dollar. You know, I'm just partial to trading the Aussie dollar. I love trading it. Here's the Aussie dollar. Okay, so, you know, this POC we talked about the other day, it might have been you, RJ, or Russ, around 75.69. You know, these bigger numbers down below, 74.81, bottom of the profile on the weekly. That's kind of interesting now, and I think we talked about this the other day, 74.61 daily profiles. I like this trade a lot. I like this stock. I like this instrument to rally. I'm not a big fan of going short the Aussie dollar, so I like stops below this general area. Did we talk about this the other day? Had we kind of been trailing down here? Yeah, we did right before I had to take a 2-day sabbatical. Thanks to RJP. He's been trading the 30-year pretty much exclusively with the scanner. And Russ, I'm still standing by this. I like to look at the Aussie dollar and not get shaken out of a long-term view. And again, you know, going back in time, I was a very, very big fan of getting long this thing above 71 and some change, 71.69 I think was the number. And again, you got to take your medicine sometimes, but you kind of got to be in it to win it. And I like being able to trade this particular instrument and not get shaken out. It's got some intraday volatility, as you can see. This is our weekly intra-week volatility. But again, I was kind of passing on this down below on the short side. I just want to kind of get to an area where we can get long again. I like how we pierce this profile. I like how we come back and test it here. Maybe wrong here with a little bit of noise factor. You got to give yourself some room. But I like how this has kind of pulled back to some inflection points, and I think we're doing another run up. And again, all we're doing is trying to play the odds here. A lot of people use the scanner. I'll tell you this, a lot of, we have some prop firms that use this, and a lot of times they will literally, because they're kind of, and I'm going to go back to the dashboard here. A lot of times these guys will basically come over here and they'll say, you know, I only want to see this scene. That's the 60-minute. And I want to sort this like this, and I want to sort it by numbers. And it's not going to give the microsecond breakouts because we do refresh this with a lot of information, but they'll look for these ones here, and they'll look for new, you know, new ones to pop up. I mean, it dynamically outputs and things that are kind of just edging, starting to get into the right above the top of a profile. And a lot of prop firms will use this just to kind of see what's starting to break out, because they like to trade very often. And again, we kind of advised against that for normal human beings earlier. But as you can see, it kind of resorts and puts things right in the forefront of things that are just starting to breach and just starting to move. And then they've got a chance to look at these, and if they want to say, you know what, I want to kind of take these and, you know, see where they're at with the daily profile, and, you know, okay, now here's something that it might be okay. We're in a long-term uptrend on Biogen, and we're starting to move above 60-minute profiles again. So, but again, you know, you've got a chance to look at these. And let me go back to this area. I may want to see, you know, which ones are pulling back into, and again, these are for very short-term guys, right to the bottom of a 60-minute, but still, you know, heading north on our daily. So these are kind of maximally pulling back on that particular time frame, Bank of America. So let me just show you what that means. So that means that we're in an uptrend, and I don't know if we're printing pre-market here. Daggone it. Got a bad print there. Sorry, guys. So we're pulling back into the bottom of a 60-minute. I don't trade on those time frames myself, but a lot of guys will use that. And then they'll look at their charts. A lot of times they'll have our indicators on their own charts too. Just one way to use this thing. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. So I had a question at the end. We're talking about looking at these 60-minute breakouts and a lot of short-term guys will take the scanner. I don't trade on 60-minute profiles a lot myself. I don't talk about it on the show because they're really not relevant for the rest of the day. If I talk about them in the morning, again, we've got pre-market pricing on here, but again, it's not anything I think you can utilize during the day too well. But if you're trading during the day and you've got the scanner, I've got the futures section up right now. A lot of times, prop groups will come in here and they'll just kind of club out this thing right here and just get it out of the way. And I'll just keep the rest of these time frames up for this explanation. So they'll come in here and they'll say, okay, well, I want to sort this and I want to see what's really starting to pierce and change momentum possibly. So you've got, here's our daily and 240 on the Canadian dollar. So I'm starting to, get above profiles on the 60-minute, possibly starting to change tone here. Here's the, I'm sorry, this is our futures on the Canadian dollar. So that's not a good one. Let me go to another one here. Let's look at the NASDAQ. So I'm going to pull this up, and I'm going to see that the NASDAQ is starting to, breach the 60 minutes. Has come down in, is starting to poke its head up again above. So a lot of times these guys will just come in here and sort this 60-minute column and just kind of look for new candidates to appear. I'm on the future section, so you don't have a ton of candidates here, but they'll look at, okay, I'm sorry, I pulled up the Canadian dollar. Let me look at the NASDAQ here and just focus on this one exclusively. I keep going down. This is the kind of setup I like to see for reversals, by the way. That's why I'm looking at the Canadian dollar on the future side. In fact, let me put this time frame back here. Weekly. This little thing here called, well, let's just use uptrend reversals here. That can't be the case. Hold on. Uptrend reversals. There we go. All right, so what this does is it kind of gives you clear, quick indications of things that were kind of in an uptrend as far as, being in a balanced area or era up or green and starting to break down for the first time. So if you keep this sort up, it will put new candidates in as they qualify for this particular sort. So Bank of New York Mellon Corp, obviously there's the daily breaking below profiles, but had kind of, been hanging in there. Not the best XLF stock in the world here, I will add. But again, just kind of breaking down on the daily, reversing to some degree. But that will show real time during the day. This is obviously showing yesterday's information. But as this starts to happen intraday, you'll see, here's Clorox. You'll see that. And again, these charts leave a little bit to be desired. In the HTML5 version, that's going to be a lot simpler. This is a much better charting package that we actually purchased. So breaking down below profiles, but had been in an uptrend, this will give you these candidates real time as they appear. So Tucker, your question was, maybe run through that 60-minute again. A lot of the prop guys will look at just short-term breaches of 60-minute profiles, and that might be in conjunction with some type of other time frame. We'd been edging down. In fact, let me do that sort for you. So, for instance, they may be saying, okay, I want to see what's kind of been going in this direction, and then starting to reverse. And they'll keep this sort up. Things that have been beaten up, but start reversing. And again, this is pre-market. You got CMS Energy Corp. So on the close yesterday, we'd been daily 240. And now we're starting to show the green shoots on the 60, kind of starting to get above. That happened for 4 straight bars. So you can find your own little reversal patterns or just different sort patterns over here, and it will dynamically update based on that custom sort that you like to see. One of my favorite ones actually is to, in this case, I have fear that the market is going to go higher, so I'm a little hesitant on even shorting anything right now. But let's just say that, and this isn't the great time to do this sort, because my feelings are, in general, we talked about early in the first part of this show, that the market has gotten up onto this plateau. It's spinning around. Some people are adjusting positions, but this is the type of action, that kind of flag, pennant, whatever, classical technical analysis, that is a continuation pattern. So it's probably not the ripest time to look at, selling weeks. Obviously, I don't think you can go wrong selling weak stocks in this environment, because it's going to be a little less painful than being wrong shorting strong stocks. But let's just say we had a market that just kind of moved up quickly, like we had recently, in that type of environment before we start spinning around. Who knew we were going to spin around? I like to find things that, for instance, might be trading below profiles, but had reached an apex, the market dragging it up on a daily. So if that was the case, which again, I've already explained myself about why this may not be the right time to do this sort. You've got a situation, let me see here. Yeah, I mean, this is a stock that hasn't really participated lately, and we're sitting right above this. This is not the best candidate in the world, but we don't have anything other than this to even lean on right now. I mean, these are, to me, also doing these sorts and not having a lot of candidates. Also, here's bottom. So we've been, down in a downtrend. We're just kind of getting back up into the bottom here on Darden Restaurants. Let's take a look at this. These are stocks that just don't want to get out of their own way. But there's not a lot of candidates at all on the short side, and that's kind of telling me, the market's got really good breadth in general, not even profile breadth. But as you look at these things, I mean, we're kind of starting to balance out a little bit here, but all things considered, you're supposed to be buying support right now. So you can do a lot of different permutations for the matrix. So here's stocks that are trading below profiles on our daily that might have just kind of rallied up into the top of our 240s. There's nothing there. There's a couple here. Kellogg, Lockheed Martin. Let's take a look at this one. Now, this is nothing you want to be shorting. So again, if you're looking to find shorts right now in the market, I think you might want to wait until another leg up in the S&Ps to try to find things that have kind of shown themselves early. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Well, this might be an example of when the manager, I'll call myself, is away, the mice will play. We got a lot of bad ticks on this 60-minute chart on Apple. I apologize for that. And that goes along with that 30-year. So I'm actually getting our tech guys to look at this right now. Again, when I'm out, everybody's don't know what happened there, guys. So I apologize on the 60-minute Apple. Russ, thanks for pointing that out. If that's what you're speaking of, we got some bad ticks on our short-term price charts. We'll clear those up immediately. Daggone it. I don't think I know there's not anything wrong with the profiles themselves. Those are calculated on our database. I want to kind of stick with Apple here, and no, that wasn't a golf outing with the president to make. Or what is he up to? 284 rounds of golf. No, wait, more than that, right? Is it 900 rounds he's played since he's been in office? I tell you what, golf's not a. It's almost like it can wear you out mentally. As you know, if you play golf, it can be depressing. You get the one shot every once in a while that just keeps you coming back out there. If you guys play golf, you know exactly what I'm talking about. But, the president playing that often might not be the best thing in the world for everybody, but he did not call me to play golf. I don't know if I'd have played. But anyway, let's take a look at Apple. The weekly. I got to tell you, I got stopped out of this. I was extremely interested in seeing this thing get back to our weekly on for highs of 98.64, but that's just the way it goes sometimes. I'm not a big fan of buying Apple above weekly profiles. I want to see this thing get back down below. This morning, we are trading 99, and again, we had a little bit of a reversal yesterday. I think that's always due this stock this day and time. I don't think. When I think, that's sometimes not a good thing, but I don't think that, looking at this in a way that, hey, Apple may have broke stride and it's time to look at this again. I'm looking at it like, hey, you know what? I got stopped out of some noise there. Went a little bit too hard and I wanted to hang on to it. I'm waiting for it to get back down below 98.64. And them's the breaks sometimes, but I think Apple can easily get back down to the balanced area with a little bit of market help. I think this thing could really revisit 91.76, believe it or not. So again, I'm just looking at Apple that way. Okay, let's hit Microsoft. We got about 1 minute. Got 45 seconds here. So. Mr. Softy, here we go. So the weekly, talked about this the other day. I'm not a big fan of trading before announcements, but, I talked about a little bit about Microsoft's kind of business line. Closed above, came back and retested 53.06. I actually like this company a lot. We talked about that the other day, and lo and behold, they had some decent news here. So what do you do with Microsoft now? Again, I think you got to wait for some new information here. You can't really buy this up here. You can't short it. And looking at the scanner and waiting for that information might be the best thing in the world to have some new inflection points to pay attention to. Guys, we got to go. Thanks for joining us. I'll be back again Monday. Stay tuned for Larry. And if I don't talk to you again, have a good weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.